Hello, everybody. Welcome to the technical analysis webinar this evening. My name is Troy. I'm a senior account manager with AvaTrade. I'll be leading the session. As we get going, let's do a quick systems check. If you would, just type OK in the chat box if you're hearing me clearly and seeing my screen all right.
Tomorrow, just
Yeah, the chat box is in a little different location maybe than you're used to. There's a new format for what you're seeing on your side. Okay, great. I've got enough responses. Thank you very much. Looks like things are up and running fine. If anyone runs into any issues as we go along, please feel free to let me know. As always, keep in mind that no one trade is guaranteed to bring profits. There's risk with each and every trade that you make. But obviously there's also nice potential profits with each and every trade you make as well, which is why we're all here, to manage our risk in a way that makes sense and go after the potential profits and hopefully come out on the plus side in the end. As you manage your risk, there are different ways of doing that. We all have different tolerance for risk in terms of what we're willing to risk per trade and per day, etc. But in general, we're making use of stop loss settings or hedge trades that you can set up to cover opposite movements if things turn the wrong way. And if you've used our AvaTrade Go mobile app, maybe you've noticed AvaProtect, which is a tool for covering risk against losses for defined time periods for a small premium cost on the AvaTrade Go mobile app, and also on our web trader platform. You can use AvaProtect on gold, silver, and FX pairings. So we'll take a quick peek at that as we go along as well. Keep in mind that as we go over strategies and concepts and information, it's not meant to be financial advisement, but is coming from an educational perspective. Now, I know a lot of traders with us in these webinars are brand new to trading, and I know there's also a good number that are experienced traders. And I think we'll cover enough variety of stuff that it'll be good for everyone who's attending, from those who need some basic ideas and concepts. We certainly break things down in basic ways, but also for kind of advanced ideas for how to look for entry points and exit points with your strategies, combining fundamentals and technical analysis. So I think it can work very well for everybody, regardless of your level of experience. Now, in general, what is technical analysis? Before we get on the live charts, technical analysis is basically looking at the historical movements of an asset, usually on a chart that we call a candlestick chart. And by looking at the historical movements over the past hours or days or weeks or months, we can see patterns. We can see movements that maybe we think are predictable, that at certain price levels, maybe we expect a certain movement based on what happened at those price levels in the past. And there are other types of patterns we can recognize, whether the movements are ranging or trending, etc. And we'll do all of that here within this session. We'll take a look at some assets that have been ranging and trending and breaking through quite nicely today with different types of movements that we can form strategies around. Usually we're using manual methods of technical analysis, which would mean we're drawing our own price level lines, support and resistance, trend lines, etc. We also could use indicators that assist you in doing that, that assist you in knowing when you might want to sell or when you might want to buy. And please feel free to ask questions at any time as we go along. This is both for learning and also for sharing, to give input. If you see something that you think we should mention to everybody else, feel free to chime in the chat box, and I'm happy to share as well as answer questions. So as we move along, first I wanted to show you real quick on our main website, you'll see, and by the way, we might have some here from Canada, we might have some of you here from Australia or South Africa or European Union or wherever around the world. So your website might look slightly different, but you have all the same basic features and options for what I'm about to show you. Mohammed. Sorry, Mohammed can't hear us, and I just want to let him know that it's just him. Okay, so I let Mohammed know it's just him. The audio is obviously up and running fine for everybody else. So if we're looking at trading platforms at the top, we go to, by the way, we have an options trading platform for those of you who are wanting to learn about options trading. They are European style vanilla options. If that means anything to you, it's not a topic for today, but you could always look into that as well. We're one of the, I think, only brokers out there offering retail options trading. Okay, so AvaTrade Go, this is the mobile app that you can trade on your MT4 and MT5 accounts, and it has nice risk management features on it. When you set up your order in the trade window, and we'll look at this on our web trader platform as well, both of which trade right on top of your MT4 and MT5 accounts. Okay, great, Mohammed, I'm glad you're with us. So what you'll see is on many assets, you have Ava Protect that's available, gold, silver, FX pairings. For defined time periods, for a small charge, any losses during those time periods, whether you pick coverage for 1 hour or for 2 days, any losses during those time periods are added back when the coverage ends. Any and all losses during the covered time period for a small premium cost. And if the movement goes the correct way, which is obviously what you hope happens, and you make a nice profit, the profit is yours. You paid the small premium up front, and that's it. So it's a way of managing risk that maybe you've never seen before unless you've been with AvaTrade a while. Also, the take profit and stop loss marks, if you program a take profit price or a stop loss price, you'll see that it calculates your potential profit for you, converting it to your account currency. It calculates your risk, how much you stand to lose to your stop loss in your account currency based on your trade size and the price that you put for your stop loss. So our app and our web trader platform both act as trade calculators as you're setting up your trade. So you understand the risk management of your trade before you ever buy or sell, which obviously makes sense to know what you're risking to your stop loss, to know how much margin is required and all of that as you're setting up your trade. So it's very useful. If we look here in the web trader, and that you log in here for the web trader platform, those of you who've been with us for a while, if you don't have the web trader platform show up when you log in, contact your account manager or support and request that it be added to your account so that when you log in, instead of going directly to the client area, you go to the web trader platform, which trades right on top of your MT4 or MT5 account. Whatever trades you do here, you'll see in the MT4 or MT5 platform and vice versa. And you'll see your client area then is accessed here. My accounts, upload docs, all the things you would normally do from the standard client area that some of you might be used to. So some features about this that I mentioned with the order window, let's say you're wanting to trade, I don't know, on gold. I usually use gold as an example. It's such a hot thing that people like to trade on lately. Let's say you're wanting to buy on gold or sell, whatever the case may be. And so you're in the order window and maybe you say, okay, I want to trade 10 ounces. So there you are. You put how many ounces? 10. It tells you the lot size right here, 0.1, 10 ounces. Tells you how much margin you need. It knows the leverage of your account. So whether you're in Canada or you're in Australia or you're in the European Union or wherever it might be, it knows your leverage on your account and tells you here's the margin impact. This is how much you need to have available in your free margin to open the trade. That's the amount that'll go to margin. And it changes as you change your trade size. Now I can go down and say, okay, maybe I am receiving signals from someplace or something, and it says buy on gold, and maybe it tells me put my stop loss at $1,800, $52 down. Okay, so I change this to 1,800 or so. Let's get rid of the 35 cents. And I say, whoa, wait, I'm risking $526. This balance is about 2,000. So what, that's 25% or so of my balance. Maybe I realize I don't want that trade size. If my stop loss needs to be down, $52 away, then maybe I need a smaller trade size. And so then I cut my trade size in half maybe. I say, okay, now I'm risking 264. Well, that's a little more than 10%. Maybe I still am not happy with that. And I go down and I say, okay, 2 ounces of gold. Now I say, okay, I'm risking about 5%, which may or may not be what you want to risk. But in this example, let's say I'm happy with that. So now I can see to my stop loss mark that that's how much I'm risking. And I knew what trade size to pick based on my stop loss price and my trade size telling me how much I'm risking. Okay, so easy risk management. Now maybe my take profit. Maybe I'm supposed to take profit at 2,000. Maybe we're expecting gold or something to go way up in this example. So then I say, okay, that's a nice risk reward. Make almost 300, risking less than half, 105. I only need to be right maybe 40% of the time with that type of setup, and I'll profit. So maybe that's what I choose to do, and I buy. Fully informed of my risk, everything. Maybe I say, you know what? Maybe instead of doing a stop loss, or in addition to a stop loss, I'll do AvaProtect. Maybe I'll protect it for, I don't know, 1 day. For 1 full day, I only have to pay $15 and change. No matter how far it goes the wrong way, if it goes crashing the wrong way, I only lose $15 until this 1 day coverage ends. It gives you the exact time right here that it ends. Any negative floating would be added back to my account, and then the trade can keep running. Then I can put my stop loss. Then I could go down and add a stop loss if I wanted to, right? So maybe I want 2 days coverage. That's only $22. So in that case, maybe I can do a bigger trade then. Maybe I do 5 ounces. Now I more than doubled my profit potential, and I'm still only risking $56 for 2 days coverage. Okay, so the margin impact is shown here. Baggio, right here, 46.32 for 5 ounces. Okay, as I change it, it changes the margin impact and my potential profit and the cost of the protection, etc. Okay, so if you expect huge movement, the U.S. might sign a stimulus deal. Maybe you expect gold to go flying up because the USD will weaken maybe with a stimulus deal. So maybe you say, okay, it's worth $56. I'll give 2 days protection. Maybe you expect that by then the deal will be done for stimulus, and you say, wow, if it goes flying the wrong way, I'm only risking 56. If it goes the right way, maybe up to 2,000 an ounce or something, I'm making a lot more, right? 735 possible profit, 2 days coverage, only 56, and then you could add a stop loss after that, right? If it was still running. So just an example, very easy to use to set trades in motion with this platform. Now, since this is a technical analysis webinar, let's take a look at some unique features. If you are only on a demo account right now, I would say get a live account, even if it's the minimum deposit. If you haven't decided to stay with us yet, put the minimum in at least so you can see all the live account features. Those of you with live accounts, you already have this. Trading Central is a premium service that usually costs money. Look here, analyst views. If we're talking technical analysis, you don't have to do it yourself. It's right here. Look, it's got the support level drawn. It's got the move, the direction that it's expected to break out and go. It gives you the exact price levels, the indicator that's used, the RSI in this case, etc. And you can switch and get this technical analysis, which also could be viewed as signals right here throughout the day. All kinds of signals ready to go, telling you what direction it's expected to move. So you could put limited risk. All of these you could put AvaProtect on, by the way. It's available on all of the pairings. And so there's your technical analysis. You also, through Trading Central, have fundamental news. You have some other things you can look at, Forex featured ideas, market buzz. We can take a look at all kinds of stuff here that is trending. So if I click on market buzz, who's trending? Pfizer, of course, Apple. What's going on with Apple today? Click on the bubble, and there we go. Dow jumps 266 points, led by gains for Apple. You might click on it, say, okay, what's going on with Apple? There's the web page, there's the article you go on to read. If you read the article, you'll see they're planning to increase next year iPhone production, maybe 31% or something like that I read. So All the information's at your fingertips here, right on the WebTrader platform. So it can give you an idea of which way the wind's blowing, or knowing why Apple went up. Maybe you didn't know why. There, you found it. It's trending. It's one of the largest bubbles on the market buzz. You can see the most recent articles are listed first. You can get old ones. The further down you go, maybe it's less relevant, but the top ones there are the most recent. So very easy to look at. I tend to be old fashioned sometimes, and I website surf the websites I trust the most, and I pull up articles, and it's the same article, right? Wall Street gains on Apple and stimulus hopes as Fed takes center stage. Sometimes you want to look at both just to gain confidence in believing a story and seeing it, talked about in more than one location by more than one source. So Apple, big news. It's in the top of a lot of headlines today. The stimulus deal that we already alluded to that could be coming in the US at any time, also driving the markets green. If you looked this morning, very easy to get an idea of what way you might prefer your technical analysis entry points, meaning the futures were green since this morning, significantly green. And when the markets opened, it was no surprise, they gapped right up, okay? They went up in a hurry. And the volatility index, which is the fear index, has been down all day in the red. So that tells you that's an easily predictable day in terms of what direction do you want to find entry points with your technical analysis. It's fear dropping all day long significantly. I'm talking 5%, 6%, 7% down on the volatility index, and the futures were significantly green. That tells you which way the sentiment was going, positive sentiment all day. And the US dollar has been weakening. Why? Stimulus is expected. If the US dollar is weakening, what do we think gold did today? It more easily climbs. What about oil? It more easily climbs. Natural gas, etc. Right? So easy to understand when you do a quick 10-minute look at the fundamentals, what direction you prefer to trade. Then when you do your technical analysis, it's much easier to avoid bad signals. Maybe you see a support level, but you say, you know what, I don't want to buy up off this support level because the fundamentals tell me it should break, right? So whatever asset that might be, or the opposite, you see a support level and you say, ooh, I'm going to buy on the S&P 500 off this support level because the market has positive sentiment from this morning. So all day long, every time the S&P 500 dipped down maybe on 5-minute candles to a little support level, you'd buy, rather than selling when it's on the resistance level, because you know it's likely to break through the resistance and not reverse down off of it, okay? And we'll take a look at what I'm talking about in real time here in a moment. So crude oil, prices rise. Why is it rising? There's a pandemic, what's going on? Well, positive sentiment was easy to predict today. You can see it. It's like reading the tea leaves, right? Just look at the headlines, look at the futures. Are they green or red? Look at the VIX. Is it down or up? If fear is down and the futures are green and all the headlines are positive, boy, it's easy to predict which way some of these commodities will likely go, right? And then we move on to some negative news that could come in the future. New virus strains spreading, some other headlines that aren't so positive. Majority of small US businesses see worst coronavirus impact still ahead. That's bad news on the horizon. Right now, it's positive momentum because of stimulus, right? And the vaccine being distributed. But around the corner, you can see there's a potential for a market pullback. Small businesses are really, really hurting. And that vaccine's not going to help them right now, not for a couple months maybe. So positive momentum now, we understand why. We also understand why there could be a market reversal coming too, okay? What would happen if Biden's trying to help, Trump and Biden are both in Georgia, the state of Georgia in the US. There are 2 Senate seats that will determine who controls the Senate in the US, the Republicans or the Democrats. And the Democrats already control the House of Representatives, and Biden now, with the president-elect, assuming nothing crazy comes to reverse the election results, Biden will be president. They have the House as well, the Democrats. If they win the Senate, they have full control of all 3 branches of government in terms of the presidency, the House and the Senate, and that means they could push through anything they want. And that might scare the markets. The markets rose when they thought that the Republicans for sure were going to hold the Senate and the Democrats were going to win the presidency. And so the markets like certainty. And if the Republicans lose those 2 Senate seats in Georgia, there goes the certainty. Because now who knows what the Democrats might try and push through. They've got a far left wing of their constituency that are pushing for really strict measures against greenhouse gases and all types of increases on corporate taxes and things that would undo a lot of the stuff Trump did that helped the markets rise. Obviously, those are for what some view as good reasons, right? To protect the environment, to do things. So we're not saying those things are bad necessarily, but in terms of the markets, they don't like big changes like that. Investors don't like big changes. You could see a market sell-off if it looks like the Democrats are going to win those 2 Senate seats. So it's something to watch, not for right now, but as we get closer to the Senate runoff, these 2 runoff elections in January, okay, which aren't that far away. So it's something that really could move the markets one way or another. It's expected the markets would respond positively if the Republicans can hold the Senate, creating a divided government and more certainty of less changes, and the opposite if it becomes an undivided government and the Democrats win those seats. Okay, so let's take a look at the charts then. We've got an obvious situation then where currently in the short term, we've got positive momentum today. And in the longer term, we can see reasons why that positive momentum could reverse over the next couple weeks. So that's something to keep in mind about market moves now and pending orders for later. All right, so I've got natural gas up from the last webinar, and I see it's doing well. If we look at the 1-day candles, about a week ago, we opened a trade on natural gas when natural gas had pushed down towards this support level here. Why is that a support level? Because we looked on the 1-day candles, we saw it was a spot where the price gapped up from one day to the next. You see the gap in price. The reason you see gaps on natural gas, it's opening and closing through weekends. You see gaps, okay? And also you could see it, no, not from day to day because it's on the futures. So it's running through the night. You only see the gaps on the weekends typically. I take that back. So we see the gap here from Friday's close to Monday's open. And you see there was a support level here at that gap. We saw it hit back here in September and bounced up. So when we saw this coming down here, we bought off of that support level at the top of that gap where this had bounced up once. And up it went and did quite well. And we figured the fundamentals were on our side. The markets were rising, positive momentum with the vaccine. Any positive economic momentum tends to drive up commodities, energy commodities like oil and natural gas. And so it did well. Maybe we'd say, okay, there's a resistance level now. I see resistance that it's reached right there, okay, for 3 days. Resistance down, resistance down, resistance down. So maybe I take my profit on natural gas, okay? So we close that out. You could stay with it if you think it'll keep rising, but that was a nice one, just as an example of something that we already did. We could look at maybe USD South African Rand. This is very interesting, this asset here. We see the South African Rand had climbed clear up to, and I've got a buy limit down here. It hasn't quite reached it from the last webinar, a buy limit, thinking that it would keep dropping, and it has. The US dollar kept dropping against the South African Rand, and we see it's nearing this support level on the 1 week candles. That's a significant support level down here where it hit and went up, hit and went up. If it gets near here, boy, that's an opportunistic spot if you think the US dollar eventually here will strengthen, okay? What would make the USD weaken more? Stimulus. That's why we were banking in the last webinar that it's possible if they pass that stimulus, we'll see the USD come down here and trip my buy limit pending order. Type OK if you know how to prepare a buy limit pending order, or type no if you don't. I'm happy to run through it again. USD South African Rand, support levels down a bit. Oh, okay. Let me run through. I got some no's there. So buy limit pending order means buy from a lower point than it is now. You can program it like I did, that if the price drops to whatever price you put, to buy. That's called a buy limit pending order. So all you do is you open the order window, you switch from market execution to pending order, and you have 4 types of pending orders. Buy limit buys from a lower point. Buy stop buys from a higher point than the price is now. Sell limit sells from a higher point, and sell stop sells from a lower point. So buy limit is the one we want if we want to program it to buy from a lower point. Now, I'm not saying you have to do this choice, but you understand the concept here. Stimulus is coming. US dollar could certainly weaken further. You could catch it at a low point. Look for how many weeks the US dollar has dropped against the Rand. And South Africa's economy hasn't been the strongest. Okay, so yes, Frank, you can do pending orders in the MT4 app, the MT5 app, and the AvaTrade Go mobile app, and on our web trader platform. What's interesting, you see how here, to do a buy limit on USD ZAR, I needed to, and ZAR is the slang term for the South African Rand, for anyone who's new, because the symbol for South African Rand is ZAR. So if you expect this to drop because of stimulus, and you say, wow, look how much it's dropped, and you think maybe it won't drop much further than this support level down here on the 1-week candles, that would be a lucky spot maybe to buy from if it drops to there before maybe it goes back up. If that's what you think, then a pending order down here, a buy limit, makes sense. Instead of having to pick buy limit, if you go to the web trader platform, and let's do USD South African Rand, USD ZAR, there it is. So I'll pull that up and buy, okay? Instead of having to know that a buy limit is a pending order that buys from a lower point, all you have to do is say buy, look at this option, execute when price hits, and put the price you want. That's it. You don't ever have to tell it that it's a buy limit or a buy stop or a sell limit or a sell stop. The web trader platform does that for you. You just say, I want to buy. When the price hits, put the price that if it hits that you want to buy from, and that's it. There's your pending order. Okay, very simple to do compared to having to understand in the MT4 what a buy limit or a buy stop is. You don't ever have to see those terms with the AvaTrade Go app or the web trader. You just tell it the price you want to buy or sell from, and that's it. Yes, of course. You can put the stop loss and the take profit as you're putting the pending order. Let me show you real quick. We'll finish it. So USD South African Rand, let's say we wanted to get in at, I don't know, 14.8. Okay, so maybe I say 14.8. That's not the price probably. I didn't look at the exact price on the chart. But let's say that's the price we decided, 14.8. You can then also, from that entry point, right? If that's your entry point, then your stop loss should be somewhere below that, right? You can put your stop loss at whatever mark below 14.8 you want, and you can program your take profit so that when the trade does open, if it opens, then you have your stop loss and take profit programmed as well. Marcella, I don't know what stop even means. I can guess. It could be once the trade gets going into profit, you could adjust your stop loss to your entry price. That way, you would be even. You wouldn't have any loss if it came back down. Protecting against losses by, once the trade is moving, changing your stop loss to your entry price. But this is how you do the pending order. And yes, you can put your stop loss, take profit marks with the pending order so that if it opens, it then has those marks programmed. Okay, and we see this still pushing down. We understand why. Look where the Rand was not that long ago, almost to 20, 19.3, right? So the fact that it's down to 14.86, that's a huge percent drop. right? We're talking like, what, 25% drop, something like that, almost. So if it drops any further, you might even buy now, for that matter, if you think the USD is eventually going to strengthen. And probably eventually it will. The question is when, right? I like the idea that with the stimulus coming, the USD might push down a bit further towards this more significant support level before potentially seeing a huge recovery for the USD, right? Maybe. The risk reward could be very good there, right? If you get in near this support level, your risk doesn't have to be very far to get below the support to your stop loss, and your potential profit could be much, much more. Okay. Ernest, you can change pending orders at any time. You can go and delete a pending order, doesn't cost you a thing, never, as long as it didn't open, no problem. You can delete it, program a new price. No problem at all. Maybe I see this drop with the stimulus and then go sideways and start to go uptrend, and I say, it dropped, but it didn't reach where I thought. Then maybe I reset a new pending order somewhere else, right? I can change it. You can see right now, good question. The question is, what candles do I use for day trading? You can see right now I'm on 1 week candles, right? Because we're looking at a bigger picture move. If I was day trading, meaning scalping with small moves during the day, let's take a look. S&P 500, I might be on 15-minute candles. Look how nice this lays out with 15-minute candles. This is just today, right? Remember I said this morning we could see that it was positive momentum, right? We could see early this morning the futures were in the green, rising up. By futures, I mean the stocks, the indices were rising since this morning, and the volatility index was down. The fear index was down, meaning positive momentum. As soon as you saw that, you could have drawn your lines and said, okay, here's a resistance level. Resistance, down. What kind of pending order could I have put right here that if it broke above the resistance, buy? That's the idea of buying from a higher point, waiting for a breakthrough candle to break the resistance, confirming, in this case, upward momentum. What kind of pending order buys from a higher point? If the movement was down here, and I said, boy, if it breaks this resistance and breaks up here, then I'll buy at this price. What kind of pending order would I program to buy from right there if the movement was still down here? Buy stop or buy limit? Declan, correct. Buy stop, a buy stop pending order, or if you're on the web trader or our mobile app, you just say buy from and you put the price you wanted it to buy from. If you're on the MT4, you need to program it as a buy stop. So you'd have gone market execution to pending order type, buy stop, buys from a higher price. So if the movement was down here this morning and I saw all the positive signs with the futures being green, the volatility index down, positive headlines about stimulus, and I say, ooh, I think the markets will rise today, but I don't want to guess that it'll rise. So I wait for it to break the first resistance level I see. So I program a buy stop price up here, and that's where I would put the at price. If the movement was still below that price, a buy stop to buy if it reached here. And would we have won? Yes, we would have won. Soon as the breakthrough candle broke through, you see it's a larger candle than the rest. That's the typical breakthrough candle. It has more momentum than the other candles. And so that's what happens. Typically, a breakthrough candle has more momentum and carries with that momentum because it took momentum to break that resistance right here. Where it was hitting and dropping, it took momentum to break above that. There it went. And so 1 out of 1, we'd have been a winner here. Okay, buying on a buy stop. Then we look and we say, let me get rid of some of these lines. Then we look and we say, where's the next resistance level? And I already drew it, right here. So once it came up and it went sideways like this, then we say, okay, it found some support. So once we said, here's a level of support, now we say, okay, we don't think it'll break below this support level because why should it break the support? It's positive news today, right? So now that we won on our buy stop, we see the momentum die, it pulls back down and it forms support right here. So now we buy, right? Buy off of the support level. So your technical analysis says
buy off of a support level if the momentum is with you, right? In this case, you buy off the support. It also says don't sell off the resistance. Why did we not, in our example, why did we not say sell off this resistance level? You know, it hit here and dropped. Why didn't we sell when it came up here? Because the fundamental news said don't trust resistance levels. They might break today. Why? Because the fear index was down and the futures were green and the headlines were positive. So you avoid selling off the resistance because you say, I'd rather wait and see if it breaks through and buy with a buy stop. And that's exactly what happened. It breaks through. We don't sell off the resistance because of the positive headlines. We buy when it breaks the resistance and we win. It forms support. We buy off the support rather than waiting for a breakthrough on the way down, and we win again. It went up again. Okay, somewhere up here, once it reached a double top and started dropping, you probably take your profit. Okay, this one here, we would have bought off this support. We had one loser, right? One loser, because we would have bought off this support level just like we did here. We would have bought here and it broke through. No problem. We have one wrong and two right. This is typically what you see when you're trading proper technical entry points going with the fundamental news. Okay, 2 out of 3, that's great. You're not going to win every trade, right? Now we see it drop to this support level, right? This old resistance, once you broke through it, that becomes support. So once it came down here, you buy. That's the technical move. It's going in the fundamental direction of the news, and that's another winner. It reached this resistance, okay? This is resistance now if you're below it. So it came up, again, buy stop pending order. Once it broke above this resistance again, you trigger your buy stop and up it went. Look at that momentum, and it just didn't stop until just now, right? So we see examples there where we would have won one with a breakthrough buy stop. Buying off the support level, trusting it because that's the fundamental news today, 2 out of 2. Buying off the support here, loser, it broke. Buying off this support level down here, winner. That's 3 out of 4. Buying on the breakthrough of the resistance here, 4 out of 5, okay? You could have sat on the S&P 500, placed 5 trades today and won 4 out of 5 by simply doing what we just did. Look quickly at the fundamental news, check which way are the futures moving, which way is the fear index moving, is it dropping or going up? If fear is dropping and the futures are green, then probably you set your technical analysis plan up to buy on breakthroughs up, to buy up off of support levels. You'll lose one here or there, and in this case, we would have won 4 out of 5. And you'd see the same thing on the DAX today. You'd see the same thing on the Nikkei. You'd see the same thing on NASDAQ, Dow Jones, etc. Because the world is so global anymore with the marketplaces, positive momentum about stimulus in the US, well, that creates positive momentum in lots of places, okay? And if there's a great Brexit deal, that momentum will also create positive momentum, not just in the UK and not just in the European Union, okay? Yeah, Declan, the trend is your friend, especially if you understand why the trend is there and you know a fake trend when you see one. The temporary pullback that looks like a trend in one direction, but you know the fundamentals tell you not to trust that it'll continue. That's how you avoid this trend, this downtrend that ended here and went all the way back up. You knew not to sell on this drop. You knew to buy off the next support level because the fundamentals told you the momentum was up, and there it went. Okay, so the question before we went through this little breakthrough and support level strategy for buying in this case, the question was, what candlesticks should you use? And for day trading, you can see here 15-minute candles would have worked great. You could have been looking at 5-minute candles. Didn't have to be 15 or 30-minute candles. I like to use more than one. Yeah, Declan, you could call that a fake out or a false reversal, whatever it might be. This was the fake out here. This was the false reversal. If you were watching the volatility index and everything else that was going on, you could have recognized that this move probably wasn't going to continue down. Okay. So yeah, we're looking at this sort of strategy, looking at 5-minute, 15-minute, but it's also behooves you, if I may use that word, which I don't use much. It behooves you to take a look at the larger candles as well, even if you're doing short-term trading, because maybe it would be good to know if right in this area on the 1-day candles, there's a major resistance level on the 1-day candles. And then you say, ooh, maybe I should stop buying. If you reach a major resistance level that's not just on 15-minute candles like you see here, maybe this spot where it hit and plunged back here, maybe if we look at 1-day candles, we see it's a more significant resistance level that's been there way back in time for a long time. I'm not saying it is, but that would be a reason why you might look beyond just the short-term candles to get an idea of the longevity of some of these support or resistance levels that we see on the chart. When we look at 4-day candle or 4-hour candles, we see that this spike that we saw on the 15-minute candles doesn't really line up with much. Further back, the resistance is up higher up here. Even this hump is not at the same spot as this one. So I don't see anything magical about this resistance. So then when we go to the 15-minute candles, I don't think I have to respect this resistance so much because it doesn't have other examples of that spot being in line with that resistance. The other resistance levels are at different price levels. They don't line up. If we looked and we saw a spot where not only did it hit here and drop on this day, but if we saw, here it lined up to the same spot and back here it lined up to the same spot, the more points of contact at that price level that then held and dropped, then you start to say, wow, that's a really significant price level. And you might program a sell limit to sell from that price. Okay. In this case, it's not. Doesn't have a lot of points of contact, but it could. Declan, I'm glad. Thank you. Thank you for those words, and I'm glad that it's helpful. It's helping to line things up. There are some that trade purely on technical analysis only, and you can be successful. The idea is with those who don't even look at the headlines, they don't look at the fundamental news, they just look at the chart and they say, ooh, here's resistance. If it gets here, I'll sell. And the idea is they don't care why this is resistance. They just know that it is. And they don't care why it might reverse off. They just know many times it does, right? I tend to be kind of on the fence with that strategy. I like to peek at the headlines before I do my technical analysis because then I get an idea, like we did today, that I preferred buying rather than buying off of the support rather than selling off the resistance. And you see today that worked out better. Okay. All right, folks. Well, we've been going for about 45 minutes now. I think this is a good place to stop. We looked at a number of assets. We could look at oil. You'll see it's similar to natural gas, where oil was going up and pulled back a bit, and now it's trying to recover up again. So one thing about oil, if we look at it real quick, let me pull up crude oil before we end things. We'll look at the energies, and we'll pull up crude oil if I can find it. Heating oil, natural gas, it's another one. We'll find it. We have more than one energies group. No, it's the same one. Why am I not seeing it? Let's look up higher. Here, this is an easier way. I'll do this. Show all. And there they all load. And we'll find our crude oil. Here it is. Okay, so I wanted to show you on the 1-day or 1-week candles, we'll see. Here's a natural resistance on oil. So if you're looking for a spot maybe to short oil, look at this support level from before. This is when the market crashed with the pandemic and with the oversupply of oil. This was the crash of oil right here, when it went down to zero on some futures contracts. And here's the recovery. And now you see this is a natural, this was an old support, 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 and then breakthrough. So obviously this rally, if it reaches right about here, right around 50, that's a natural line of resistance that you could have a pending sell limit ready to sell from somewhere around 50, 49, you pick your exact price. You could sell from this major resistance, and you're likely to see a pullback before it could break through, obviously, but you're likely to see some kind of pullback at that resistance. Okay, that's a major old support level that got broken way back here. The amount of momentum it took to break it, look at that momentum. It's going to take momentum to break back above that line. So as this price gets closer and closer here, you may have a good opportunity maybe to short oil here with a short stop loss just above that resistance with a much larger potential profit for a pullback. Okay, just something to think about. All right, everybody, we'll close on that. Thank you for joining. We'll be back at it Thursday afternoon for my next session. And between now and then, good luck with your trading. Bye for now.